we feel like there could be some financial havoc coming, and that's not to be fear-mongering, but we want to talk about mitigating risk because proactively, if you take action today, you can avoid some of the pain that an economic crisis or an economic recession might bring. So, welcome to Loans Elevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Broch Lassig, and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, TJ Heidenreich, and together we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth.
All right, guys, welcome back to another episode. Today, we're actually really excited to talk about this topic. So our business is formed around this idea of holistic mortgage planning, which boils down to three major pillars, which is optimizing the leverage, mitigating risk, in effort to mitigate risk, and also maximize wealth. Today, we're talking about the middle section, which is mitigating risk. And we feel like this is such a relevant section because in our minds, there is some economic uncertainty and risk that's floating around that maybe all the data, the news, the flashlight is not shined on it right now. But for us, we feel like there could be some financial havoc coming, and that's not to be fear-mongering, but we want to talk about mitigating risk because proactively, if you take action today, you can avoid some of the pain that an economic crisis or an economic recession might bring. So wanted to talk about that, things we're doing in our personal lives. Teach, take it away. Tell us, how are you using certain tools to mitigate risk in your life long term, and how is that working?
Yeah, well, one of the first things that I do, I'm capitalistic. I like money, and I like to not have a bunch of money sitting in my account wasting away, not being used. So I like to budget to zero. So at the end of the month, have no money in my account, have it all invested or in areas where it's actually making me money and working for me, not against me, and having inflation just eat it.
You made the most important point, which a lot of people need to understand. If money is sitting in your bank account and inflation is at 6% and the money market account's paying you 2%, you're actually negative 4%.
You're losing money every single month by having it sit there. Yeah, it feels good. It feels safe.
Right.
But it's working against you, not for you.
And most people, it feels safe. Most people don't recognize the tools you're about to share and the paradigm shift that's required to leverage these tools properly and really maximize wealth. So this kind of ties into the third statement as well. But a lot of people just don't understand that you can have as much certainty without the cash sitting in your account rotting away. So.
Yeah, no, definitely. So I like to have budget to zero, have no money in my account, but then I have it all invested, but then I have home equity lines of credit on both my properties. I have access to funds and I can use them as needed. And you can have up to $500,000 on a HELOC, correct? So I've got,
right now, and that used to be before the mortgage market kind of did what it did most recently with the rates going up and things getting a little bit shaky in mortgages over the past year, you could have up to $1 million. So if you had a ton of equity, if you had that much in equity, you could have $1 million line of credit. Now it's capped at 500. But
yeah, exactly. So I've got these lines of credit that if I need to deploy them, and I've needed to deploy them in the past for other investments or to subsidize payments or whatever I need to use them for, I've got access to. And oftentimes there's introductory rates where it's pretty cheap for the first year. Now after that, it gets a little bit more expensive, but needless to say, you've got these funds you can deploy. And I actually have a personal story. We were doing a deal together where I think we needed, it was in the hundreds of thousands of dollars that we needed to use. And I had my own personal funds tied up in this, and the deal ended up going longer than we thought by months and months.
Like a year longer. So we did a hard money loan. It went way longer than we expected. And Tej had his cash tied up in this investment. But had the line of credit available.
During the same time period, my monthly income also started to slow down because rates started to go up.
Yep. Mortgage industry slowed down. So it was like a perfect storm of, oh crap, my liquidity's gone, and oh my gosh, my income is down. And it looked pretty grim.
Right.
Like
it's
the
like,
market
all right,
did not
cool.
look good. This was like, what was this, May of 2022?
Yeah.
It was crazy.
Yeah. So I'm like, oh crap, what am I going to do? Well, I've got this access to these funds because I don't want to pull from any of my other investments because they're still making me money and accruing interest. So I don't want to pull from that. But I'm like, well, I can pull from this. I still had great introductory terms to this HELOC. My yield, I was making greater returns in my investments than what I was paying on this home equity line of credit. So I pulled from that to subsidize, help me get through this weird storm of a time, and it came out just fine. Now, had I not had a HELOC and been prepared, I would have been SOL. There's no way in hell I would have been able to get through
You'd
it.
been late on payments, maybe lost your car
Right,
or your house
exactly.
or
Just the
something crazy.
weird stuff you don't think about.
Yeah,
And you were kind of going through a similar thing.
Yeah.
Well, because we were also at the same time, I was buying my new house and rates are going up and he's building a house. So we had to have cash on hand just for the weird stuff that comes up.
Yeah, it was a crazy, crazy time. And I think the big thing we want to underscore is TJ's talking about this in light of opportunistic use of this. So he's got all of his money deployed, but he's got this backstop. And if he needs that backstop, he can use it. So he paid, his mortgage payment with it. He paid his car payment with it. He paid whatever. He paid these things with it, what he had to because income had dropped and liquidity was down. So there was random expenses he paid for it, but he also had it available, or I guess the alternative is, say you didn't have the cash, you have this money available for unique investment opportunities. If income's not going down, this is ways that I've used it and still use it to this day. Right. In fact, today I wired money from my home equity line of credit for an investment. So I did another hard money loan. I've got my cash invested elsewhere, so I have no free cash right now, but I pulled some money out of my HELOC, put it into a hard money loan. My HELOC's costing me I think 8% today. But I'm lending the money out at 13%. So I'm making 5% on the equity sitting in my house that otherwise would be sitting there earning me nothing.
Anything.
Right.
Yeah, exactly.
And then, so let's summarize real quick. One of the major things here on risk mitigation, we're giving you ideas on how we're leveraging it. The big thing you need to think about is before an economic crisis happens, before you need the money, because not everybody's going to relate to this idea of opportunistic investing with the money. We're pretty aggressive investors, and that's just the way we work. But a lot of people, might just think, well, I only want to tap that money if I really need to. And that's kind of the alarm we're ringing today, which is you may not have lost your job yet. It may not look like the possibility of you losing your job or losing income or some need for money is coming, but it'll hit you before you know it. I mean,
and once it hits, it's too late.
Exactly.
That's the problem. You can't go get a HELOC when you don't have a job. You don't
100%.
have access to get any of this
You
stuff.
have to be proactive.
Yeah.
And we're seeing clients, blue collar and white collar clients alike, losing their jobs fully unexpected right now. I mean, I'm seeing it on multiple times per week basis. I've got clients of mine that are losing their jobs. So, and unfortunately, they weren't proactive. I talked to a guy this week. He didn't have it set up. He's no longer employed. He doesn't have documentable income. Guess what? He can't get a HELOC. Now he's in trouble. But if he would have been proactive, and we talked 6 months ago, got that HELOC prepared, he would be just fine, have hundreds of thousands at his disposal to weather the storm that he's in. So I think this is important, and the rule of thumb that I use, as soon as I buy a property, as soon as possible that I have enough equity to go get a HELOC, I get a HELOC, and I don't get just how much I need, because I rarely get a HELOC to actually use the money. I don't go get a HELOC because I'm like, oh crap, I'm gonna go
buy a car.
something. Yeah, I don't. That's not why I do it. I get it for this risk mitigation idea and opportunistic investing. But I buy a property, I go get the maximum amount the bank is going to give me, because the cool thing about a HELOC is you don't pay anything if you don't use the HELOC. So it doesn't cost you. You can just have hundreds of thousands of dollars of liquidity, or even tens of thousands. It doesn't have to be that big of a number on the sidelines available for you to use if and when you need it. And if you don't use it, you don't pay a dime for it. So it's crazy. Yeah. Another cool tactic that I taught TJ about, and he's just kind of starting to employ this now, is you can get lines of credit. So a lot of this is lines of credit, but it's awesome. You can invest money into the stock market. So tons of people have money in the stock market, whether it's the S&P 500, you own some Apple, Tesla, whatever in the world you own. A lot of people have money in the stock market. Well, you can get a line of credit that is secured against those assets in the stock market, and then use that money just the same as you use a home equity line of credit. And you pay interest only. You can use it opportunistically. The only thing on mine anyway, because I have one of these, you do too, I can't use it I can't buy another security. So I can't go get this loan and then go buy another stock with it, but I can use it as a backstop, financial backstop for paying bills.
Yeah, but if you want to start another business with it, if you've got weird stuff like that, to create
or buy a
assets.
House.
Yeah,
I bought a house with my line of credit against the stock portfolio.
And you don't have to be an avid investor to borrow against this. If you have a 401k, you can borrow against your 401k, which most people have a 401k or some sort of retirement plan that you can borrow against.
So many options. But the trick here is you've got to be proactive, because again, it requires some income validation. They need to make sure that you can legitimately afford to pay this. Now, when you lose your job, they don't get notified. So it's not like this thing shuts off if and when you lose your job.
It's just a one-time thing.
Right. But you have to qualify. qualify. So you got to be proactive.
Exactly. Yeah.
So I think that's really what I had. Is there anything else that we're missing that is really critical?
No, I think that's it. I mean, yeah, we run it. I mean, every single day with our multiple businesses that we're operating and even our personal lives. It's super crazy. If you guys have any questions about this, please don't hesitate to reach out to us anytime. More than happy to talk about this on the phone. This is the type of stuff I love.
Yep, we get stoked about this. We've got home equity line of credit options that are fully automated. You could get funds in as little as 5 days on primary residence, second homes, investment properties, all of the above. So we could help you tap into this and get yourself prepared for the potential of an economic recession or storm coming. In addition, we have referrals for fantastic financial advisors that can help coach you through. Okay, cool.
I mean, it's like if we don't have the right product for you or have the right ideas, we have the right resources that we can point you in the right direction based off what you are looking to do.
Yep, we've got a deep network of vetted people that we personally use, that we trust, that can help you get into some of this stuff. But this is what gets us excited: strategy, thinking through, being proactive, trying to think outside of the box of the normal run-of-the-mill financial thought processes. Really, they're old-fashioned, they're broken, and it's a lot of fear-ridden, anxiety-ridden ideas that don't work for you. It actually costs you money every single month. So anyway, that's the ideas. Thank you guys for tuning in.
Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.